Hi everyone, welcome to another honeystocks.com stock market analysis. This analysis will be going out on Saturday the 13th of August 2022. Now, before I dive into the charts and flip over to my screen share, again, blown away by the number of messages and emails that I've received over the last few weeks. As most of you who follow me know, I was probably one of the very few analysts that turned bullish 6 weeks ago, and obviously since then the market has been on a massive rocket ship, and I hope everybody has done well out there. I hope portfolios have recovered, etc, etc. The question that I'm really being asked a lot at the moment is something along the lines of, Sam, how long can this rally possibly last? As always, I'm going to get into those sorts of questions and to the charts in a lot of detail, and we can have a look to see what we can expect. But a couple of things just to get out there from the off is, one, I'm not a day trader. I couldn't think of anything worse. If you are slinging weekly options, trading on minute time frames, there's plenty of YouTube gurus out there that will happily try and convince you that that's the path to go down. But if you are into a mid-term, longer-term approach, maybe have a bit more of a trading, investing mindset, then you'll probably get a lot of value. My work is really geared towards weeks to months. So let's dive into the charts. Let's see what the market's telling us, and let's see if we can make some sense of it. Now, as always, before I get into this, please do pause the video. Make sure you're comfortable with that before watching any further. Basically just says that there's not any investment advice. Please do all your own due diligence and don't be silly. Just to give myself a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm very widely known for in the professional game. A few of my recent calls back on the 22nd of June, I called pretty much the exact bottom in the market. Back in January, I also called the exact top in the market. As you all know, I don't use the magical hindsight indicator. I timestamp all my work, and the small caps, I told the world on Twitter in November that this was a problem. I did the same thing at the start of January, and if you want to go all the way back, also timestamped is my analysis provided to our clients a week before the market crash in 2020. I'm told that I'm quite good at reading the market, so if you do get some value from this, please do like and subscribe. It all helps with the YouTube algorithm. So we'll just quickly touch on the performance so far in August. Now, this is what's called a seasonality chart. We know that July was absolutely incredible. I hope everybody did very, very well. August has started off, this is what this little blue diamond is. We are massively outperforming typical August performance over the last 70 years. But my thoughts are now starting to turn attention to September. As we know, if you didn't know already, September is the boogeyman of the markets, and it's generally a month that you want to just kind of keep an eye on for signs. That there's not any coincidence to me when we start to see some really negative news headlines in the month of September, and of course we can traditionally we can get market sell-offs. Now, I've been pointing it out for the last few months that the dollar index is really the chart to keep an eye on. It tells me everything that I need to know, all the economic data, all the charting data, etc. There's an inverse correlation with the dollar index and the S&P 500, as this chart shows. The thesis has really been dollar down, stocks up, and we can see that with the S&P 500 ETF SPY that we have broken out now above a decent level. So the hope is that this can be some kind of catalyst, at least in the short term, for a further move higher. We already know that the yield curve is getting worse. I've been covering this one for a few months. The shaded areas are recessions. We know that when the yield curve inverts, we do typically head into a recession. Now, I'm not here to debate the definition of a recession. The goalposts appear to be changing on this week by week, but we have to be aware of this, in my opinion. Yes, we can use the dollar index. This was a chart that I actually posted to Twitter this week, just highlighting that we've got the 50-day simple moving average, we've got a bit of a trend line support, and we have broken below these levels. So for me, I'd like to see the US dollar index start to drop off a little bit. In that environment, I would expect the S&P 500 to move higher. I also posted this chart to Twitter this week as well. And of course, this is a chart that I've been communicating with our clients and members over the last few weeks. It was part of the thesis that if these levels would hold up in the market, then we could be approaching a tradable bottom. We just need to have a look at the Dow to see how that played out. I always look at charts through the lens of, well, what if this holds as support? And there's nothing really fancy about the charts. It's all very, very basic technical analysis, support and resistance. And these levels so far have held up pretty well. We already know that the 200 week moving average has held up beautifully as well. And if we want to zoom in a little bit, we can see that with again, basic support and resistance levels, we're potentially moving above another fairly significant level in the market. So the signs are at the moment for my work, we are certainly, in my view, we're a lot more bullish than we were a few weeks ago. There's a lot of macro firms out there with their economic models that are having a really horrific time of it at the moment, and certainly I will never criticize anybody's work on an individual level, but certainly for me, technical analysis provides more relevant data to the average retail investor than the economic data does. The reasons for that is, as retail investors, we can really act in the market in real time. We don't have to unwind positions like $1 billion worth of hedge funds have to unwind positions over time. So for me, the technical side of things just makes a lot more sense, and certainly the small caps again rebounded exactly where you would expect them to rebound. Again, I covered this chart a few weeks ago, just highlighting that if we get a breakout above these AV/WAP levels, then it's likely to be a catalyst for a bit of momentum, and again, that's exactly what we're seeing at the moment. So yes, we are in a bullish environment. Yes, I am open to the possibility that it is still a bear market rally and nothing more than that. That's where risk management really comes in. And when I talk about risk management, I'm really talking about utilizing basic technical tools like trailing stop losses, etc. And this is what I'm talking about, that this is actually a high conviction idea that went out to our clients, and it's obviously doing pretty well, but just applying some kind of technical tool that just helps you to manage that risk, to extract as much of the trend as possible. I'm not in this game for little $1 or $2 moves. I want to be in a stock for $50, $100, $200 moves. And the only way to do that is to have some kind of risk management process in place. Especially if you're trading something like options, certainly longer dated options, where, in my view, that's where the consistency comes in with something like options. But Netflix, I think if Netflix can get into this gap area, we know that a lot of charts like to fill gaps, and for me represents about 30% potential upside there. The ARK ETF, again, this is one of the charts from our client members sector chart book. breaking out, in my opinion. There's nothing fancy about the chart. Again, I made a bottom call on this one 2 months ago. It initially met our upside objective, 40%, but if the small caps and Cathy Wood is going to have her day in the sunshine again, this might be a logical starting point. We've got Ava's budget group. Again, I think the earnings looked pretty decent. Low PE ratio, big earnings growth. I think there's massive upside risk to reward potential there. Freeport McMoran. Again, I made a bottom call on this one just purely based on RSI historic readings. Again, it's playing out, and I think we're now looking like we're forming a bit of a bottom base there. If you have a look at what's happened with copper and the copper miners this week, they are having a great week, and hopefully, if you are in the camp that Freeport McMoran is bottoming, again, you can apply basic tools like trailing stop losses to help you manage that risk. Big support level in place for Microsoft. Again, I've been covering this one for a couple of months. Historically, it's been a great stock, and this has been a great buy point for the stock. American Express. I covered this one on social media a few weeks ago, and a couple of you were asking me about updating the chart. For me, it's very, very straightforward. There's a target there that I'm looking at around 175. Unity Software, now this was provided to our clients and members last weekend. It has ripped 20% this week. However, we know that stocks don't go up forever, so I think this is worth adding to your watch list, because a lot of charts like to break out and then retest, and what you're looking for on a retest is really just a bit of a rebound, and then generally you'll get the follow through to the upside. So I think Unity Software, if you like the metaverse names, Roblox again above 55 makes a lot of sense. Again, it's not any coincidence that the price rebounds from these levels that I have set up, something that's been tested, and I like Roblox above 55. We've got Nvidia. Now, I am anticipating a little bit of a battleground level here between 200 and 210. I think most of us understand that Nvidia is a great stock, great company, etc. So we'll see what happens when we get to this level. I think we're at 186 at the moment. But if we can get a breakout above this level, then I think Nvidia might be one of those names that really starts to get flying. Again, asked for lots of updates on INMD because I've been posting this one to social media for the last 2 months. Done very, very well. Again, I would just encourage everybody to have some kind of risk management process that takes thoughts and feelings out of the game. Certainly, it's doing very, very well. It was pretty reasonable to expect some kind of pullback when you start to get into overbought conditions. But I'm still very, very happy with INMD, and certainly our clients are very happy with it. So we'll see how far that ultimately wants to run. Now, I've touched on Apple over the last couple of months. It's one of those names that has held up incredibly, incredibly well throughout all the market downturns. I've been highlighting how it has been outperforming the S&P 500. This is what's called a relative strength chart. It just compares Apple directly with the S&P 500, and given that this chart is going up, it tells me that Apple is outperforming the S&P 500. If you want to have outperformance in your portfolio, you should be looking for charts and stocks that are outperforming the benchmark. And of course, what's happened is Apple has rebounded from very logical levels, and I am expecting this to retest all-time highs within the next week or two. Amazon has met our upside objective. However, we all know, again, Amazon is one of those names that pretty safe as houses. Yes, you have to endure long-term chop. It's really a chart and a stock that can do nothing for a very long time. But if you are looking to dollar cost average on names like this, I would suggest that Amazon's probably not a bad place to be. But I think for, if you're looking for a new entry, etc., either a very deep pullback here or a breakout above this 150 level would make a lot of sense in my world. PayPal, again, trailing stop losses. It has now broken out above $100 and it's doing very, very well. So there is optimism there that we are potentially looking at a bottom, just to kind of just illustrate it a little bit. I think a lot of, investors look to just kind of buy stocks randomly on when they're moving down, and that can create a lot of mental hurdles when we deal with things like market crashes and corrections, etc. So, just to kind of, give a little bit of insight into the technical approaches, we are really just looking for base breakouts. Yes, I get it. We are paying a little bit of a higher price than, if you were to time it perfectly and get it down here. Yes, you're paying a higher price, but I would much rather pay a higher price for having the knowledge that I'm able to manage risk and that there is some kind of sign that the stock is bottoming. So I'm not overcomplicating it. Base breakouts, bullish divergence, I don't see what's not to like. Arista Networks, again, done very, very well. This was given to our clients a couple of weeks ago, and it's off and running. We've got Tesla. My thesis has not changed. You would be absolutely blown away by the number of vicious emails and messages that I get whenever I cover Tesla. There's a lot of angry Tesla shorts out there. I get it. You're being blown apart most of the time. I would highly recommend that if you're in the business of shorting Tesla, that you have some kind of risk management process in place. It's not I would never want to bet against Tesla. If you are betting against Tesla, you're probably asking for it at this point. My thesis has not changed. I'm fully expecting this one to go and test the upper levels of this range around $1,000 probably in the next couple of weeks. Gold, again, lots of messages on this one. For those of you that pick up my free weekly letter that I send out to the investors that obviously sign up for a lot of my free content, the thesis is still intact. It's still 22.5% upside. And we'll see how far it ultimately wants to go. GPC breaking out to new all-time highs. Again, this one was provided last week to our clients, and it's doing very, very well. This is another one, certainly the steel index. I've been very, very vocal on social media about this one as well. Not overcomplicating it, looking for failed breakdowns and base breakouts, and it's starting to move towards the upper end of our targets. And just a quick thing as well is, if you are still here, please do hit the like button. It tells me that you are getting a lot of value, and like I said before, it really does help with things like algorithms, etc., and it helps to get my work promoted out there on social media. If you are on Twitter, Stock Twits, and you have a lot of followers, again, feel free to share. Again, it would be much appreciated. But this is a chart that in actual fact is quite humorous to me. One of the world's biggest short sellers, notorious short sellers, reached out to me on social media this week calling me an idiot because I posted the charts for Coinbase and MicroStrategy, just highlighting that they had already capitulated and had already bottomed. Now, the individual, who I'm not going to name, really just said to me, "You've got no business, you don't know how to evaluate a company," and he blocked me before I could put in my reply, which is fine. But what I would say is that generally speaking, this is what capitulation looks like. Massive downtrend, the downtrend accelerates, and then ultimately, if it's a stock that is going to rebound, you generally want to buy capitulation. Obviously, on growth stocks that are going to zero, then certainly not. But stocks like Coinbase, like MicroStrategy, if you're a believer in Bitcoin, for example, they're not going to zero. So these have played out exactly as expected. I think Coinbase has had a little bit of a hiccup this week, but ultimately the way that I view it is it's just filled the gap, and ultimately we will see how far those stocks want to go. Yes, they could of course decline from these levels, but again, if you are someone who has bought the capitulation or you have been buying in here somewhere, just have a risk management process in place just in case Bitcoin and crypto falls off a cliff. But yeah, I just wanted to touch on that one because I do find it quite humorous. But if you are somebody that is still here, feel free to stick around for a second. Again, please do hit like, subscribe. Let me know in the comments, what do you think? Is the stock market going higher? Is it going lower? What stocks are on your radar? Please do let me know. But if you have just stumbled across my work for the first time, feel free to go and check out our website at honeystocks.com. We provide memberships to all of our premium work, which goes out to our clients and members every weekend. We provide access to our high conviction investment ideas, which I will show you in a second what those look like. Provide access to our midweek halftime report. We've got access to a wonderful investing trading community, lots of different mindsets in there, options traders, long-term investors, swing traders, etc. Provide access to my chart book every single weekend. I update all of our sector ETFs and commodities chart books. So, if you're looking at a certain ETF, for example, you can go in, you can log into your account, and you can go and have a look at my chart books, which I upload for everybody to have complete access to. And if you are somebody that is looking to learn technical analysis or having a process, then I also include access to our technical program, which is included with all of our memberships. But just to quickly show you what our ideas look like, this is a recent one that went out for Netflix. Now, I did make a bottom call on Netflix down here, but I have put out a high conviction alert for Netflix recently. It's up 8-9% already. This is the steel index that I presented just a few minutes ago. That was sent out as a high conviction alert. Of course, when the market turns, I'm not against short positions. The commodity index was a prime short. Zillow, Box, they all did very well. But I am very unique in what I do. I log on our website for complete transparency all of the high conviction ideas that have ever went out to our clients and members. So feel free to go and check that out on our website. There's not any penny stocks. It's all good quality companies, and certainly using a combination of technicals and fundamentals. So feel free to go and scrutinize that. But I think if you are somebody that has a mid-term, longer-term approach, if you are maybe just too busy, with family and life, work, business, to hunt around social media and find the best stocks, then our work is probably a good fit. If you want to be part of a really good community, and if maybe you're looking to get away from day trading because you've finally realized it doesn't really work, but feel free to go and check out our website. And if you've stuck around to the end, thank you very much for watching, and I hope to welcome you soon. Thanks as always.